Welcome to the new video series of my YouTube channel. In this series, I will analyze specific stocks and evaluate their current price and historic performance. Remember that this is just my opinion and not financial advice. I will start this new series with the first stock that I've purchased, which is VICI Properties. VICI Properties is a REIT which stands for Real Estate Investment Trusts. So what are REITs? Real estate investment trusts allow individuals to invest in large-scale, income-producing real estate. A REIT is a company that owns and typically operates income-producing real estate or related assets. VICI is a REIT that focuses on real estate properties that include large gaming, gambling, and entertainment destinations. They own almost 100 properties in the entertainment business, including 4 championship golf courses. If you're interested in the details, you can check their website and check out their investor booklet with lots of details. They own several properties in Las Vegas, such as the Caesars Palace, and they even own the Chelsea Pier in New York City. So, is there any money to be made with this stock? Let's have a first look by analyzing the stock using fast graphs. Here you can see the maximum available historical data from VICI Properties. The current price is $32.54. VICI Property is a REIT, so we don't use the typical adjusted earnings, but we correlate the price to the free cash flow to equity. This AFFO has been growing at approximately 6%. Their fair value is about 15 times, which is very close to their normal price to AFFO ratio of 15.37. These values can also be seen in the chart. In green we can see the growth rate of the AFFO. The orange line is the fair value ratio and the blue line is the price to AFFO ratio. Furthermore, we can see the white line which shows the increase in dividend. Also in red we can see the yield of the dividend. This has been steady around 5% and in the last few years has been increasing to even 5.7%, which is very interesting. The black line shows the current price to AFFO ratio at which the stock is trading. This is below the blue line, which is the normal price to AFFO ratio. At the bottom right we can also see estimates for coming years. For 2025 we see an estimate of 4% growth. For 2026 and 2027 we see about 2 to 3% growth. We can also use fast graphs to zoom into more recent years. We can see that the AFFO growth rate has been increased slightly to 6.6%. The other metrics are very similar. So it seems that the stock is currently trading at its fair value. Now let's have a look at my own chart, which I have developed to value stocks. The black line shows the growth in revenue, and the yellow bars show the growth in free cash flow. Both look very good. This next chart shows the compound annual growth rates. The black bars show the growth in revenue, and the yellow bars show the growth in free cash flow, and the red ones show the growth in dividend yield. All these bars show significant growth over the past 7 years. So it looks like this company has been printing money for several years now. Let's have a look next at the dividends. This chart shows the dividends per share and the dividend yield. The dividend per share have been growing from $1 at 2018 to almost $1.7 at the moment. Furthermore, we saw already in the previous charts that the dividend yield was steady around 5% and has recently been growing to almost 5.7%. So from a dividend perspective, this company is very interesting. Besides the yield, it is very important that a company grows their dividends, because this can compensate for inflation. Another important metric that I like to look at is to compare the free cash flow to the amount of dividends paid. Here we can see that the free cash flow is much higher than the dividends paid. This means that the dividends can be easily paid by this REIT. We can also see that the diluted shares outstanding is increasing over time. This is something very common with REITs and that they use so that they can make new investments. They increase their share to get additional capital. They do this instead of borrowing money at very high interest rates. REITs are sensitive for high interest rates. In the past few years, the interest rates has been going up dramatically. If the interest rates are going down, then it will be easier for REITs to borrow money for new investments. In this situation, I'm estimating that the price of VICI will go up, because it's currently trading below their price to AFFO ratio. If this doesn't happen, I'm also not so worried, because I get a nice 5.7% dividend yield. So what do you think about VICI Properties? To me, it looks like an investment that is very stable and that has still some potential to grow over time. Furthermore, their high dividend yield can provide a nice additional income. Thank you for watching my first video in this new series where I discuss specific stocks. Make sure to like and subscribe to not miss any future videos.